the people who want to make the most money will make it as hard as they possibly can so that you will give away what you're supposed to be managing. You'll give it to somebody else that you've never met in your life, and you're hoping that in 30 to 40 years, because that's what you were told, well, the market goes up 7 to 10%, whatever, over a 30 or 40-year time frame. Well, that's great. But if Wall Street is taking 3% of your 7% every year, you're never going to get to your retirement goals. And all you're doing is feeding them money. What we saw with the last generation, the baby boom generation, over 40 years, is they retired with a median amount of money of only $289,000.
A lot of people think I'll put it in savings, right? I'm
Yeah.
getting 2.5%, 3%, and you're going, wait, just a minute. If you're getting, some places they're actually even getting 1% in the banks, well, inflation is going up more than that. So by putting it in savings, they're actually losing money every single month.
If we can keep people uneducated and talk them into doing stuff that benefits us, meaning the big institutions that are out there, but doesn't benefit the individual, then they'll always work for us.
What do you think's the main reason that most people just struggle to achieve financial freedom?
The main reason is just because, and you know this because you've done this. So we talk about, when we break people down, and who is it? Robert Kiyosaki wrote a book a long time ago, The Cash Flow Quadrant. And he breaks it down into 4 quadrants, and 95% of the population is on the left-hand side of the quadrant, which is an employee or somebody that like buys a Subway franchise. So they buy the business instead of working for a business. But they never understand the mindset of an entrepreneur. And from an economic perspective and an educational perspective, in the United States, our whole education system is based on training people to work for other people to build their wealth and to build their success and their future instead of building their own. And so when you're raised with that all your life and you don't know anything different, there's a blind spot there. And a blind spot is something that you don't know that you don't know. And when you don't know what you don't know, there's no way to find it out unless somebody pulls the curtain back and starts to show you that no, there is actually a better way. So when you think about it, back in, and even today, but back even when we were in high school, college, and everything else, nobody taught us about how to handle money. Most parents don't handle money well, so they can't teach their kids, and they're not very good role models for it. And then they're not taught in the education system at all, either on the school level or on the collegiate level. And then they're thrown out into the workforce, and they finally get out of college. And they used to get out of college with little to no debt, but now they get out of college and the average college student has $100,000 in debt they're dragging behind them, and they're going to work for somebody else, and they have more month at the end of the money. Yeah. And when you have more month at the end of the money, how do you ever expect to get ahead? Also not knowing how money works and how to use money for your benefit instead of money using you for its benefit.
I love what you just said, Mickey. Using it for our benefit. Now, you've taught over 50,000 people. What's the most common mistake that you find that we make when it comes to our financial freedom journey?
Well, and it's so interesting, when you look at money, people hate to talk about money. In my background, I was on church staff for 15 years before I got involved in the financial markets. And so kind of I used that background as well. And it was always so funny how many times whenever the pastor would talk about, it was like tithing Sunday, which is when you're giving money to the church and the pastor's talking about what the Bible has to say about that. And it was a Sunday every year where more people would leave the church than any other Sunday. And most of the people that would leave the church, weren't giving a dime a year, so it didn't matter that they left the church. I mean, they didn't need to. But the church has never sent them a bill either for any of the services. So even in there, people think that everybody is out to get my money, but what people don't realize, and that's not just true in the church, but it's true in business or anything that they're offered or that they're looking at, people are just always out to get my money, but when they look at it, they really don't have any money to get. Then we get into the retirement arena or in the trading arena, which is kind of my arena for the last 25 years. And when people take a look at the trading environment or the retirement environment, they act in a way that they never would in their average daily environment. So for instance, pick your favorite store. I mean, where do you like to shop?
Well,
Personally.
It seems like I'm at the grocery store most than
Well,
ever.
I mean, but someplace fun, like,
Probably
there's
Nordstrom's.
something that you're looking at that it's like, someday I want to pick that up. It's maybe it's something that you like to do. It's kind of a stuff thing, a dress, pair of shoes, a vacation,
Yeah.
or whatever.
Yeah, it would be Nordstrom's. I like to go to
Okay.
Nordstrom's.
So you go to Nordstrom's and you had your eye on something for a long time. You know what the price of that particular item is because you see it all the time, and you've seen it as low as 40% off its price when it goes on sale, and you've seen it at its full retail price. And so, what you wouldn't do is you wouldn't walk into Nordstrom's and look at it at its regular retail price and then say, you know what? I'm going to sit back and wait and see if this thing goes higher. And then when it goes higher and I know that more people want it, then I'm going to buy it. We don't make decisions that way. How great would it be if you could just go to the cashier at Nordstrom's and say, hey, the item on rack B over there in this size, I'm going to give you my credit card. Go ahead and swipe it and put it in the system. And when that particular item goes on sale at this particular price, I want to be a buyer of it. So we want to buy things when they're at a low price. I mean, your background and what you've done in real estate. I mean, the real estate portfolios you build, you're not looking at, well, let's wait until real estate gets to its highest price and we know that everybody wants a piece of real estate, then we'll buy it. No, we build our inventory when nobody else has any money. And everything is on sale, and because we've been good stewards of what we've got and we have a lot of resources, we get to buy into things at their absolute lowest price, and that's how wealth is built anywhere, whether it's in the real estate markets, whether it's in the stock market, futures market, any different market. That's how wealth is built. It's the old saying, you buy low and you sell high.
That's right. Well, that's the biggest thing. And so there's often, though, a fear of risk that comes involved because when I was younger, I'd hear the stock market and I'd go, oh, that's scary. I've been told about the big crash, like one crash and everybody hears about it. Right?
Oh, yeah.
So how do you help people overcome that fear and see the potential that's out there?
Well, and everything involves risk. So, I usually start off if I'm teaching a class by asking people how many things did they know how to do when they came out of the womb? And so they always laugh about it. It's like, well, I knew how to do nothing. And it's like, okay, well, when you started to become mobile and you started to crawl, there wasn't much risk in that because you were close to the floor. But then when you started walking, there was risk. And you kept falling down, and usually the diaper would catch you, right? And then as we go through life and we start to learn sports, there's risk in sports. You can get injured. When you become a teenager and you want to drive that car so bad, there's a lot of risk in car driving. I mean, especially with teenagers and how many people get into serious accidents and get hurt. So there's risk involved in everything we do. And as we get older, the risks get bigger unless we've learned how to mitigate risk along the way. So even with my own two daughters, when they got to the driving aspect of it, because back in my early days, I'm a, quote, professional driver because I had a commercial driver's license when I was in college and drove the big buses for the university. But I knew about driving, been very blessed that I've never been involved in a car accident, and just know the rules of the road and know the risks that are involved. So when I started teaching my daughters, I didn't take them out on the road. I actually took them to my church because it's on 82 acres. And it has like this long road winding back into it and these big parking lots and then a long road winding away from it. And so I took them up and down the road and into the parking lot probably a couple of hundred times until they could overcome the risk of the parking lot and falling off the road and learning how to turn and stepping on the brake. And then we took the next level of risk. We went out onto some back roads. And then once they mastered that skill, then we went to the next level. So it's only risky if you jump into something that you know nothing about and you don't understand the risk. That's when you're taking the most amount of risk. But I didn't do that on my own. I just didn't become a great driver out of the blue sky. I wasn't born as a driver. I was taught by an amazing driver. And it's a reason that I give credit to. I was mentored to be a great driver by somebody who already was. So it's everything in life. If you want to become something great in life, you need to find somebody that's already done what you want to do and follow in their footsteps and hopefully be mentored along the way by them.
Yeah, mentoring is very important. You know, it's interesting when we're babies, there's only two fears that we actually are born with. One is falling, and the other one is loud noises. Every other fear we teach ourselves. Somewhere along the line, somebody was told something about money that makes them fearful. Oh, I don't want to get into the stock market. I don't want to do those kind of things because I might fail. So you've been instrumental in building companies, you've been instrumental in helping people and building cultures, actually. And when I attended the class that you were part of, and you've helped so many people by instructing, you literally help build a culture of learning that's a very easy environment to be in, with us knowing nothing about what you're talking about. Because, I mean, there were hundreds of us in the room, and
Yes.
there we were with hearing words about the stock market, that W's and M's, and how do you look at this, and what does this mean, and what does that mean? And yet it was such a great learning culture. Talk to us about building that culture, and how did you do it so quickly with a group that you didn't even know?
Oh wow, yeah, that one's great. So a couple of things. I want to touch on something that you said in all of that as well. It goes back to that blind spot thing. You don't know what you don't know. So when people get involved, when they finally do get a job and they go to work and they sign up for their 401k or their 403b or TSP plan or 457, what they don't realize they're doing, they're told that, okay, put every paycheck, you're going to put money in this. We're going to buy you mutual funds, and they're usually really horrible mutual funds, but that's another time, another story. We're going to buy you mutual funds regardless of price and with 100% full risk. And you're going to do this for the next 40 years of your life. And oh, by the way, as your advisor or the person that's helping you through this process, I don't trade any of my own money. I'm not, the advice I'm just going to be giving you is what to buy. I'm licensed to sell you a product, yet I don't trade, manage my own money, or know how to handle the risk of my own money as well. Those are the people that you're trusting your financial future to. But because they have a license or letters after their name, people think, well, this must be a trustworthy organization or individual, and they don't even know the risks that they're taking. So they're jumping out of an airplane without a parachute, and they're hoping that they're going to land on, somehow come into a soft landing. And what we saw with the last generation, the baby boom generation, over 40 years, is they retired with a median amount of money of only $289,000. So for 40 years, every paycheck, they were putting money in there, and they retired with only $289,000. So that's the thing, and that's what really motivates me as a teacher, is to communicate truth that transforms lives, and to show people things they don't know that they should know, so that'll break them out of what John Maxwell calls so much, you got to get out of the people pile. Right. You can't get out of the people pile unless you know what you're doing. So that's just a little aside on that. On the culture aspect of it, again, I was taught how to build culture by people that had built cultures before me, and I had been a part of great cultures. And great culture always starts with communication and value. So the organization understanding what's our mission, what's my role, what's the job that I'm supposed to be doing, that I'm going to be held accountable to, how does that impact the overall team? Because if I do a great job, it helps the team, and if I don't, it hurts the team. And then really building the value into those people, that they know that they are people of value, that are valued whether or not they are they're at the beginning level of the organization and they're just coming in and they're getting their first paycheck, or they were on my C team. Every one of them knew that they needed to value the others. Who was it? I don't know if it was Simon Sinek in his book about understanding why, but there was a lesson I learned about culture, that when you look at officers in the armed forces, and it was a principle about officers eat last, or leaders eat last. Yeah. So they always let the troops go and eat first, and then they came behind them. But what I found out in ministry and in business is that the leaders of businesses and the leaders of churches always seem to want to have the highest seat at the table, and they would eat first, and they would put themselves first. They wouldn't put their people first. So they were never able to build a culture, because people didn't feel like that their leaders were there to serve them. They really feel like their leaders are just there to use them.
Well, I think you hit on something right there, because you were a servant during that class. You were there. No question was not a great question. Every place, everybody, wherever they were in their financial world, you met them there. And you spoke their language. I watched, I loved observing the way that you help people. And you cultivated this culture of action. And I think that word, well, maybe people just aren't taking action when it comes to their money. What action should we be taking today?
Yeah, well, and it's what I had referred to a few moments ago. You've got to learn about your money. So if you call the individual who is responsible for, so the custodian of your retirement account, if you have your own IRAs and they're with a management firm, and you call the individual at the management firm and say, ask them one question. If the stock market, and whenever somebody says the stock market, they're referring to one index called the S&P 500, which is 500 stocks across every sector of our economy. So if the stock market fell 50% in price, how much would my account drop in value? And 9.999 out of 10 times are not going to give you a number. Now, a real risk manager and a portfolio risk manager should give you to the penny what your number should be. So if a student of mine has set up the trade the way that I'm showing them to, just last week when I did this live with real numbers, I was in San Francisco this last Monday, Tuesday, and Wednesday. And on Wednesday morning, the markets were open. And so I was co-teaching that class. And one of the instructors that was there asked me if I would show them what it looks like to buy insurance on their portfolio so that they could limit the risk of them. And so I showed somebody with a stock market portfolio how to take the risk from 100% down to 5 cents on the dollar. And once I did that, they were amazed at how simple it was, how little they knew about it, and they were angry that their financial professionals never told them about it or offered that to them. And I told them, don't be angry. They don't know. They weren't trained. They don't know. So a question I would used to ask is, who cares more about your money, you or Wall Street? And everybody would always say me. And then I would come back and say, well, the real answer is, who gets the most benefit of your money, Wall Street or you? And nobody can answer that question. And then for the next hour, I would show them how over time, Wall Street takes no risk on your money, but they'll get anywhere from 30 to 50% of what you're putting away for 30 to 40 years with no risk in the position whatsoever, talking to you maybe once a year, and all you're doing is feeding them money. So,
Yeah, go ahead.
no, that was pretty much the end of it. So that's the big thing. So taking action is learning, okay, I don't know what I don't know. And if I don't learn what I don't know, then I'm going to be in the same position as the generation in front of me. So I'm Gen X, born after 1964, 65, 66 and on. And we look back at the baby boom generation. It's, oh my goodness, they can't retire. I mean, you and I were both listening to a speaker, I think a couple of years ago, that was talking about this is the first time in the history of the United States that there are 4 generations in the workforce at one time, because the baby boom generation can't afford to leave, which means that my kids, my 25-year-old daughter and 23-year-old daughter, are really having a hard time breaking in and making any kind of money, and their husbands, because the baby boom generation can't retire. They can't afford to. They have to work till they die, because there was no pie at the end of the rainbow. There was no 3-legged stool of retirement, a pension fund that they could rely on, Social Security and savings. They put all their eggs in one basket, in the 401k and like basket. And once they went to draw money out of the basket, it wasn't full. It was the opposite of the loaves and the fishes that people have heard about,
Yeah.
of that being multiplied. It actually went away. It shrunk. So they thought their basket would be full of resources, but when they retired, it hardly had any resources for them to do anything with. And that's a predicament that we're in the United States, and on the cusp of a major market collapse. Hey, some people are glad Donald Trump got into office. Some people are not. As a businessman, I think you'll be able to help maybe get us out of what's coming. But it didn't matter if Joe Biden, Kamala Harris, or Donald Trump was in office. We went from when Trump got elected the first time, we were $19 trillion in debt. 8 years later, 4 years of Trump and then 4 years of Biden, we're now almost $37 trillion in debt as a nation. We doubled our national debt in a matter of 8 years. So it took us from 1913 to 2016 to get $19 trillion in debt. And then it only took us 8 years to double it. So somebody's got to pay that bill. And when the bill comes due, that's when you see markets, all markets, financial markets, real estate markets, because it's just another asset class. It's a hard asset versus a digital asset. All markets collapse. And those that get beat up the most are the working class Americans, and those who make the money are the ones that understand how to make money when everything is falling apart.
Well, and the interesting part right now, I mean, our little granddaughter just got a job. She's 14 at Urban Air, right? And
Yeah.
so now she's the fifth generation entering in, and as Tim Elmore reminds us, we've got to teach these kids financial literacy. Yet, if we don't have financial literacy, how can we ever teach our kids? We need people like you, and we've got to become educated about something that most people never want to talk about. And we're not just talking about stock options and futures and all of that, because that feels intimidating. When I walked into that class and I thought, okay, I'm going to learn about options, I'm going to learn about futures, I'm going to learn about these processes, thinking, oh my goodness, there's such complex strategies. And you made it so simple. It's really not complicated. It's just that we've been taught, because maybe our parents didn't know about money, they didn't want to talk about it, our teachers didn't want to talk about it, and therefore it must be really taboo to talk about it in our subconscious mind, right?
Yeah.
So what was it that got you so interested in making all this so simple for everybody? Because you did a great job.
Well, it's one thing that I learned too when I was on church staff. Really, what people think are really deep theological or biblical concepts, they're really not when you break them down in their simplicity, because God's not a God of confusion, is what we were always taught. And so if something was confusing or just way too deep for me, it was kind of, I would look for, okay, what is the simplicity of this? What am I missing? And I found that out there. Then when I transitioned into the marketplace and started teaching the financial markets, I was just surrounded by a group of amazing individuals that took me, kind of under their wing, and started to show me that all the stuff that you were taught or not taught. So when we look at our parents, the school system, and everything else, it's not that they don't want to teach us. They just don't know. Because if they did know, they wouldn't be in the bad financial position that they're in. They would be acting on it. So it's not a thing of that they don't want to teach us, they just don't know how to teach us. Then when I met the individuals that actually understand all of it, and I had made it so confusing by reading all kinds of books and doing all the stuff that everybody else does that doesn't want to make any kind of investment of themselves to really learn how to do this the right way. These guys took me under their wing. I'm thinking of how I used to get in trouble when I was a kid. Took me under their wing and started to show me the simplicity of the markets and how markets move. And when they showed me that it's no different than anything else, do you want to pay full price for a vehicle, or do you want to have a vehicle that's on sale? Do you want to, the example that I used with you with Nordstrom's, do you want to pay full price for something? You want to buy it when it's on sale? Real estate investors, do you want to pay full price for something and then try and fix it and flip it on the residential side? Or are you trying to get something way below value that you can build into something amazing, sell to somebody at a decent price where you still have margin? You've helped them out by putting them in an amazing home, and you've helped out your business by being able to grow it as an entrepreneur. And we can take that across any financial product that we're talking about in the world. So what I've learned is the key things in life are simple. Marriage, people say, oh my gosh, marriage is so complex. No, it's not. It's simple. There's just some basic, simple principles on that. One of the things I found out in marriage and marriage counseling, though, was that the majority of marital breakups, if I was doing counseling with couples that were kind of at the end or looking to put their marriage to bed, once I dug down deep, there were usually two things that came out. It was either major disagreements over finances and differences of opinion or lack thereof that was causing all kinds of other strife that would lead to all the things so they came to me because, well, he did this or she did this. when we boiled it down, it all started with stress over finances, or somebody had some kind of abuse in their background. But most of the time, it was finances. So when you look at finances, and going back to my time on church staff, one of the things that I realized and was taught when I was going through seminary is that the Bible speaks more about stewardship, finances, and money than it does about any other subject. So I just became a steward of that, and I became a student rather of that, to find out, all right, why is it being made so simple? And then when we go to Wall Street wants to tell you that you're not smart enough and you don't have the time to do it. Yet the way they're taking money from you is by you just giving them money and them absolutely taking advantage of you with fees over time and not working for you a bit. That's pretty simple. Somebody gives me money once a year, I do something with their money for them, and I'm charging them 2.2% or more per year, and I'm taking no risk in the position. And now my wealth, I retire from the financial sector wealthy, and all the people whose money I had under management barely have enough to even think about getting by with even a middle class lifestyle.
Well, and this is why I desired to come to the class, because I wanted to know what was actually happening. I wanted to know what they were doing with my money, right? Because I was giving to them and still give some to them and say, you invest it. I don't take high risk. I don't take low risk. I'm kind of moderate. And they go, oh yeah, we'll keep it in that moderate range. And then I started thinking, how do I know? And is there a stock? And it actually started when I thought about Christmas, and I went, boy, lots of people are going to be buying Christmas gifts. Where are they going to buy them? Most of them will buy on Amazon. It seems like they sell everything from cars to whatever, right?
They really do.
So I thought, well, I'll go buy some Amazon stock. And then I thought, well, I don't even know what I'm doing. It's not like I go to the store and say, hey, give me some Amazon stock, right? And so that's one of the reasons I came to the class, number one. Number two, I didn't realize how simple all this is. So what's the one thing that most people overlook when it comes to investing their money and taking risk?
Well, when people really don't look at investing their money, that's what's so scary. Because again, once they get out of college or they take a job, and if there is a retirement plan, that their company retirement plan, they're automatically enrolled in it. This is just something that absolutely blows my mind, because it was a change in the law to where when you joined a company, they would sit down with you and they would show you their retirement plan. And if you wanted to join it, great, you could. Now, as soon as you join the company, you're automatically enrolled unless you opt out. So that's very bothersome to me. And then people don't understand what they're doing. They're given this prospectus, and here's what's going to happen. So every 2 weeks or 1 month when you get paid, we're going to take money out of your paycheck. We're going to put it here. We're going to match you. And it's kind of like, oh, well, the company's giving me free money. And then we take the time out. If you go back and look in history, what they basically have done with a 401k is the match is just a benefit that you would have received somewhere else in the company. Maybe a better medical plan, maybe profit sharing, but now the company is just throwing it into this plan so that you'll join it. The company has no responsibility whatsoever. Whether your retirement plan makes $1 or not, they have no responsibility with it. And the custodians of the plan, because people have signed off, when they signed off, oh, I'm involved in my 401k or 403b or whatever, they've signed a piece of the paper that they never read that says, you should never put any money in the markets that you cannot afford to lose 100% of. But nobody's read that. They just go to the cafeteria at work. They're explained this retirement plan that the company's going to they're going to put a little bit of money in, you put your money in, and then hopefully in 30 or 40 years you'll have enough to retire on. And then they just forget about it their whole working life. The money comes out, they feel good because they're contributing to their retirement plan, but none of them know how it works. Nobody's ever looked at how it works.
We're told, put all your money in there. Put as much as you possibly can in there. At the end of the year, it's like, hey, put more in because you have the opportunity to put more in.
Yeah.
And it is a good thing, because a lot of people wouldn't even do that and they wouldn't have anything at all. Yet they can lose that. And so let's just very quickly go into what's the difference between like an IRA and a Roth?
Okay, so an IRA is something, if you're making below a certain amount of money, then what you can do with an IRA is you can contribute about $7,000 a year, and there's two different kinds. So the individual IRA is money that you take before you do your taxes, you put it in the IRA, and so that gives you a tax deduction. So if it was $7,000, now you have $7,000 left that you're getting taxed on. What you give up for that is that you cannot take any money out of that IRA until you're above 59 and a half without receiving a 10% penalty and then having to pay taxes, just like the taxes would fall to the bottom line like they do today. So on the traditional one, now the good thing about the IRA though is if you know what you're doing and you've been trained to be a trader, or in this case, in an IRA, an investor, you can self-direct that and get away from all those fees I was talking about that Wall Street is just absolutely stealing from the American public to the tune of trillions of dollars a year. You don't have to do that. So now your risk is just knowledge. Do I have the knowledge to be able to do this right? And can I do it? The Roth IRA, which is even better, if somebody has the margin in their annual income lives to be able to take that same $7,000 and put it in a Roth, you can't touch it until 59 and a half, but everything that grows in that Roth, once you do start to take distribution from it later on in life, you don't pay any taxes. So all of the gains grow tax-free. And then when you're pulling it out, you're not having to pay any taxes, where the person that was in the traditional IRA, when they start to take it out, they're paying taxes on the gains. So it's great when you're young and you're coming out, max out those Roths as much as you can, because once you get to a certain amount of income that you're making, the IRS starts to pull away from you how much you can contribute. Then you have to know a little bit more. Hopefully by then you've also learned how to be more of an entrepreneur and work to build your own wealth instead of working to build somebody else's. And then there's all kinds of things that come into play. SEP IRAs, where you can put up to $68,000 a year away. Roth 401ks that you can set up against your own company, where you can grow your money tax-free. So it was taxed when you got paid, then you put it in, you grow it tax-free. So they're very simple solutions that people can do. But again, people perish for lack of knowledge.
Yeah, it's just being smart with our own money and being great stewards of it. A lot of people don't know that once you reach a certain age, that you are required to take so much out of those IRAs and pay taxes on them. Of course, you can give it to charitable contribution, and you have to give it all. You can't touch it, right? So you either give it all to charity, or you have to bring out so much and pay taxes.
So for the few people that actually have money, when they get to 73 now, they raise it from 71, and you take your required minimum distribution of 4%, the IRS is going to they're going to get that money. And then with poor estate planning too, which is another topic for another day, but with poor estate planning, people can pass on that burden to their kids if they don't do it the right way. So again, money is something that we deal with every day, but for some reason, we don't feel like we need to understand how it works. And not just how it works in our own lives, but how it works on a macro perspective, how countries work, how money flows from one sector to another sector, or one market to another market. And again, it's very simple stuff to learn. You can learn it with, and when I say this, sometimes people just don't believe it. If you have a phone that has a calculator on it, where you can do addition, subtraction, multiplication, and division, then you can be a successful trader and investor. It's really not that hard. It is simple. It's the people who want to make the most money will make it as hard as they possibly can, so that you will give away what you're supposed to be managing and taking care of for you and your family. You'll give it to somebody else that you've never met in your life, and just hope that, and you wouldn't know them, you wouldn't know who the money manager is, if you bumped into them at a restaurant, and you're hoping that in 30 to 40 years, because that's what you were told, well, the market goes up 7 to 10%, whatever, over a 30 or 40 year time frame. Well, that's great. But if Wall Street is taking 3% of your 7% every year, you're never going to get to your retirement goals. And that's not something that they tell you.
Well, and
So that we're trying to get the word out.
a lot of people think I'll put it in savings, right? I'm
Yeah.
getting 2.5%, 3%, and you're going, wait, just a minute. If you're getting, some places they're actually even getting 1% in the banks, well, inflation is going up more than that. So by putting it in savings, they're actually losing money every single month, and they think they're making it because they get a little bit of interest. So what's the first thing that you think we should do as an action step today? Because we can't go into all of this. I
Yes.
highly recommend everyone go learn about options, learn about futures, learn about what money does, even if you never do it. At least you'll understand it, right? Only once you understand it, it's more fun to actually be in charge instead of giving your money to somebody else to be in charge, like you said. So what's the first action step?
You want to. It's the same thing that we do with anybody, with anything else in life. If you want to get what other people have, you have to be willing to do what they did. And I love that. Again, going back to what John has taught us over the year. If you want to get out of the people pile, you have to do things that those people aren't willing to do. So you have to put in more time, stop wasting your time, start to take your time and really look at, and I'm talking about every day or every week, this time is set aside for me to grow in whatever area it is. Personal growth, leadership, culture, money, understanding money. And then you've got to find an organization, because unfortunately in where I'm at right now and what I've done for 25 years, there are a lot of bad organizations that claim that they're going to teach you how to be successful at trading and investing and teach you about money, but they're really not. They're charging you a whole lot of money. They're going to give you information that you could get for free on the internet, and you're going to be no better off. So that's the downside of this industry. There's only been a few really credible organizations that I've worked with, written curriculum for, and taught in the financial markets over 25 years. The one that you went to right now that I'm working with, a company called LifeSearch. They're a company, and they're more of an evangelical-based company teaching people that are in the church how to be better managers of their money and everything else. But you know what? There's no requirement to have any kind of religion or faith whatsoever. So that just happens to be the organization right now that I'm teaching for, that I do coaching for. And if you're looking to learn, they'll do these little workshops and seminars, and that's called their Wealth Search brand. And then what you went through, Dianna, is you came through their Life Search brand. So you went to see some entrepreneurs that were highly successful entrepreneurs, because you're a highly successful entrepreneur. And highly successful entrepreneurs want to be around other people because we'll glean from them. So you went there, and then we talk about, so we do 1-day inspirational events, 3-day events to teach you about 3 different things that we're looking at, whether it's building a business, looking at real estate, residential, commercial, or how to learn about money in the financial markets. And then you get to finally remove that blind spot. You learn you learn how to figure out and know what you don't know. So when I don't know what I don't know, I'm left out there to be taken advantage of by other people until somebody pulls back the curtain and shows me what I don't know so that I can move forward. Then from that point on, you just decide, is this the right area for me? So do I want to learn how to self-direct my retirement accounts? Do I want to learn how to become a trader? If the answer is no, then get your money out of the markets. Don't have them exposed to equities and stocks and mutual funds and everything else. Because if you don't know how it works, why would you put money in it? It makes no sense. Same with real estate. And you see this because most of the people that get involved in real estate, and they do it either as a profession, becoming a real estate agent or broker, most of them don't know what they're doing and fail. Just like everything else, because they don't have somebody that'll come alongside them, like a Dianna, that can take them and say to them, okay, 95% of what you've been taught is useless. Let me show you how things really work. And then you show them the simplicity of how it works in that arena. I'm showing them the simplicity of how it works in the financial market arena.
You said it takes time, and yet when we set time aside, because when I first met you, I go, I don't have time for this. And then I realized, I need to take time for this. I understood money a lot more than a lot of the people in the class, yet that didn't make me any better. There was so much more to learn. And now I have the grandkids to where, hey, would you like to be put in the will? Then you're going to learn about money. Because I started studying how when you leave money, sometimes it's more of a burden than a blessing. The other part is it generally doesn't go beyond one generation. If it goes to two, by the third one, it's wiped out. We've got to teach ourselves and our kids about money. I'm really passionate about this because too many people are... I read where the average American has less than $1,000 in a savings account right now.
It's true.
What
Yes.
happens?
Yeah,
What happens
because
if you
where are
have
they
enough
saving
money?
now? They're saving in their 401ks, right? That's what they're told to do. Put as much money there as possible. So savings has gone away as a traditional way to put away money. Like my grandfather, that I'm named after, the one that I was kidding around before, Mickey DeMio, Americo DeMio. So he worked for the Nassau County Police Department for 20 years, and he got a pension fund. And then he went to work in the family business, which was basically building racetracks up in New York. So anybody that's listening that understands horse racing, so Yonkers and Belmont and a lot of the Trotters tracks, Roosevelt Raceway, they were influential in building all of that, and that's where he created his wealth. And so following in my grandfather's footsteps, I always wanted to be able to do what my grandfather had done. But back then, you just didn't talk about money. So when I would ask him, Pop, how do I do this and how do I do that? It was, you don't talk about money. I don't know where that came from. Somewhere it was an inherited belief that he picked up from his family. But here's what happened with him. With the money he made in helping to build these racetracks and run these racetracks, the pension funds that he had, my grandfather had more money than he could spend before he would die. And he was the only one in my family, both sides, that actually had that. But he never passed that down to us because for some reason it was taboo to talk about money. And it is taboo in families today. But now it's taboo and families don't talk about money because they're not good with it. And how can a mom and dad who who hardly have enough money to make it through the month, who, like you said, have $1,000 in their savings accounts, how are they going to teach their kids? So even if their kids ask them, can you teach me about money? Well, they don't know. So the answer is no. And then they're not taught in any other environment. And, money makes the world go round. Well, it does. But it goes around more. There's a smaller amount of people, going back to that cash flow quadrant book I was mentioning before, 5% of the wealth of the world is, or I should say 95% of the wealth of the world is controlled by 5% of the population. And then 95% of that is controlled by 1%. So there's amazing disparity, and it comes from if we can keep people uneducated and talk them into doing stuff that benefits us, meaning the big institutions that are out there, but doesn't benefit the individual, then they'll always work for us.
Yeah,
And one other thing you said that was really interesting too about generational wealth and going down. So did this big study on it, and the Vanderbilt family going all the way back to the late 1800s, who, if any of you have gone to North Carolina and gone to the Biltmore Estate, which was built by George Vanderbilt, my brother, who I just love to death, he lives in North Carolina, and that's his passion. He loves the estate. He's retired. He can do a better tour than any tour guide there. He knows everything about every room and every tapestry in that place. It was so much fun. And then when I found out, and he was talking about George Vanderbilt, I'd never really looked at the Vanderbilt family and done that history. So I dug into it. And I found out that Cornelius, who built the empire and was a horrible dad and really bad to his kids, drove one of his sons to suicide, didn't believe in the other one as well, and then his favorite passed away young from a disease. And he had built this incredible empire that today it would be worth trillions of dollars. And he passed away and he left it to his son, who he didn't believe in. He didn't care about generational wealth at all. And then his son William took it from a $100 million organization to $200 million in 6 years. But by the time William got it, he was old. And so he retired after 6 years and said, I'm going to spend some of this money that I've been working so hard for and getting beat up so much on all my life. And then he died 2 years later, so he never got to do it. From that point on, within 2 more generations, 90% of the Vanderbilt money was gone. There was a family reunion they had in the early 70s where everybody who showed up, now not every one of the Vanderbilts did, but of all the Vanderbilts that showed up, not one of them was worth 7 figures. And that was just, I read through that and was just looking at, oh my gosh, what a dysfunctional family. Nobody was ever taught about money. And then if you know anything about the Rockefellers, so I'll let your listeners go and study that one on their own because that's a much better model. John Rockefeller, who had a very solid background in money, made sure that he put his money in trusts for his kids, but they had to do things to earn the money in the trust or it went somewhere else. So you did not get money for free. It was not passed down. You had to prove yourself before you got it. And so today, every Vanderbilt heir that's born gets a trust still here in 2025. But they have to earn the trust money. And so they have to learn how money works, how business works, how not to be part of the 95% that are working to build and service other people's wealth, but how money works so that they can build that and then be able to pass it down to the next generation. So it's just an interesting juxtaposition between those two families.
It's so important, and we just can't stress enough to learn about money. They can take your class, they can go just study it, okay? Study it from great people. So Mickey, how would they find you? I know you're on LinkedIn.
I am, yeah, I'm on LinkedIn. They can, anybody that wants to just ping me and ask me questions, do it off of LinkedIn. And then again, so my company right now, I contract with the company I mentioned before, LifeSurge, which teaches people about financial markets, building businesses, does real estate, both commercial and residential, and teaches folks how to build those kind of businesses. But on the financial market side of it, just go through something as simple as what my good friend here, Dianna, went through with me when I got to see her down in her hometown and spend some time with her and everything else. I mean, our students come and their eyes are opened to the financial markets and how money works, and it costs them less than $100 to go to it. And it's a starting point. And then once you know about it, yeah, you'll know whether to take another step or not. So don't spend thousands of dollars with organizations. Anytime you guys see something, and you'll see it on your Instagram feeds because your phones are all listening to you right now. Your iPhones and your Android phones are picking up on stuff like that. And you've never noticed that when you talk about something, all of a sudden it shows up on one of your feeds. So when you see things that are popping up and people are promising you that you're going to be making this much money in this short amount of time with hardly any education, run as fast as you possibly can. They're out there to take your money. When you find somebody that's going to give you a tremendous amount of financial information at little to no cost, understanding that now they have advanced education that you can get involved in. But what we do is open people's eyes over 3 days to what all these markets look like: stock, options, futures, foreign currency, the crypto arena, and more importantly, managing your retirement accounts, understanding the risk of your portfolio. By the time you finish that 3 days with us, one of the things you find out is, I want nothing to do with this, and I'm taking my money out, and I'm going to become a real estate investor, or I'm going to start my own business. But if you don't know what your money is doing, why are you putting money into it? Don't invest in something you know nothing about. So you've got to get away from what the masses do and following the masses. Again, going back to John, you got to get out of the people pile, because people that are in the pile never get above and enjoy the things that people who do something extra and are willing to go that extra mile and learn more and take it further and take control of their own lives. You'll never get to enjoy those things that you see other people enjoying in their families if you just keep doing what everybody else does. And then the old definition of insanity, right? So if what you're doing and doing over and over again is not giving you a better financial result, then you got to stop doing it. You got to do something different. And so check them out, lifesearch.com. They go all over the country doing these big events where you can get inspired by other entrepreneurs that have done really well in life, and then go learn about money and get your money safe. Because if we have another, and we will, it's inevitable. It happens about every 8 to 9 years. You'll see a market correction of at least 50%. So your 401k will turn into a 201k. And to be able to recover from that and be able to retire and do the stuff you want to do, very little people can do that after a 50% hit in their retirement accounts. So just get educated. That's it. That's all a youth pastor did from a church who was challenged by one of the board members of the church to learn about money, and it changed my life.
Yeah, and we're challenging everyone today, and I don't mean to laugh from a 401k to a 201k, even though that sounds real fun. Yeah, we need to know what we're looking at, what we're looking for, and how to be good stewards and multiply that. Oh, wow, that sounds like a hallelujah. I don't know where that came from, but
There you go. It's time.
I guess it's hallelujah time for the finances. I thank you, Mickey, for helping us today and opening our eyes to finances. See, we become like the 5 people that we associate with. Go
Yes.
associate with people that understand money. Go to the classes where they teach you about money, and then teach your children, please, just for the world's sake, because as it gets going, they're going to need money. Inflation is always there, right? Help them
No,
out.
it always is. Yeah. And it'll always eat you up. And again, the principle is, if you want to do something, if you want to get out of that pile, you have to find somebody that has gotten to a level you want to get to and follow them and do whatever they do. John Maxwell got me out of the people pile by teaching me about personal growth and leadership. And I grew as a leader, and I grew personally, and it took the church and the ministries that I was involved in to a whole nother level. Dan and Tom Howe, that owned PTI Securities in Chicago, took me under their wing. They were professional traders off of floors of exchanges. They taught me how money really works. It took my financial literacy to a whole different level. And it's been that way in everything that I've done. I haven't gotten there by reading a book, watching a YouTube video, taking a $20 class or whatever. I got that way by doing whatever it took to get around people that were at a much higher level than me, that could lift me to where they were at, instead of me just staying where I was, hanging around 5 people that were at the same level that I was at, that couldn't lift me to any other level because they were not there themselves.
Yeah, well, that's what you're doing. You're lifting people every single day to a higher level. And we just so appreciate you being with us today. Thank you so much.
Thanks for having me. It was so much fun. I love hanging out with you.
It's great.